John, you and I get involved in a lot of transactions, and
Yeah.
transactions involve money, and part of that money is what we call closing costs.
Yeah, this vague, broad term out there.
Closing costs.
Right.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
The way I visualize these closing costs, they break out into segments, and goes to some of the reasons for why people play word games with it. Closing costs, in some people's eyes, can be referring to the costs or expenses related to just the lender.
Right.
That's too simplistic in my opinion.
Yep.
But some people do that, and so what I want people to know is if you're trying to figure out which lender is giving you by the math and by the numbers a better deal, yes, you look at the interest rate, you look at the cost that the lender is charging, and there's a sort of a wide variety of that amongst our industry.
Sure.
You're going to find that some lenders will have, just kind of giving you ballpark numbers here, lender fees, and forget about what label they give you. They'll call it underwriting charges or processing charges or lender service charges or lender fee, all these different verbiages. It's about money going to the lender. That's anywhere from, in our market, say $700 to $2,000 in expenses,
right,
depending on who you choose to do business with.
Right.
The points on your loan are also a closing cost, but that's by definition, it should be optional. You, in most cases, can get an interest rate on your loan with or without paying any points.
Okay.
If you choose to pay points, you should get a lower interest rate. That's
points
the
being
driver.
points. Each point is like a percentage of percentage against the rate
Of the loan amount, right? So when I say 1 point, that's the same as saying 1% of the loan amount.
Gotcha.
Right. All right. So there's lender related fees like that, and then there are third-party costs that the lender tells you who to use, such as we choose who the appraiser is, who the credit reporting agency is, flood checks, all these different little miscellaneous third-party things that we need. We will estimate for those for what's real life, and that'll be what it is. There's only minor variances that from one company to the other. Not really worth, like in my opinion, micromanaging that and saying, this company is offering an appraisal for $50 cheaper, that kind of stuff. That's going to happen, but it's not going to be a needle mover.
Right. It shouldn't be consequential.
Yeah.
Right.
Then you get into title and escrow charges. This will be the same for whoever you use when it comes to a lender, because that's a third party once again, and you guys, the seller and the buyer, choose which company is going to be offering escrow and title services in our market.
Right.
We don't control that. We only estimate for it, right?
Right.
And so that's where you get a little bit of variance that comes in. It's one of the areas that I use to pad in a few bucks.
Right.
For things I don't know about right at the beginning.
Yep.
My goal being that the bottom line is within $500 of where you end up at the end.
Right.
That's sort of my mental goal.
Okay.
So that the lender costs, the miscellaneous costs for third-party services, title and escrow, all that lumps into a closing cost number.
Right.
And then the way in our industry, the way we do it, on the other side of the ledger here is your prepaids.
Right.
These are things that are not a cost of the transaction necessarily. They are expenses related to the ownership of the house. So that's your property taxes, your home insurance policy, your
HOA,
your transfer tax, and different things like this.
HOA fees.
HOA can fall under there. So those are things you're paying for your own benefit and as part of your ownership. But they fall under this other category of prepaids. In our industry, the way our forms are designed, they do carve those two things out into two different buckets.
Okay.
But all of it totals down to the bottom line.
Right.
Where you get the most variance is in the true miscellaneous items that are on the end. And this is where home warranty comes in.
Right.
Realtor-related fees,
Yep.
HOA-related fees, these type of things all fall under this other miscellaneous category where lenders are good and less good about estimating for those things.
Yeah.
There is a rule in lending that says, unless I can validate a specific expense and say, here's how I came up with that number, I'm not supposed to put it on your estimate.
Okay.
So because I don't know what your HOA is charging on day one, I don't put in a dollar amount for that as like I should. But what I do is I'm padding it in other places, usually the title side.
Gotcha. Okay. And what happens these days, it's interesting because the fees related to HOAs are have always been negotiated within the body of the contract. And there's usually 4 or 5 different fees that are related to that. There's a transfer fee, there's a capital contribution fee,
Right.
there's a resale package, there's a demand fee, there's all these things. And it used to be that they were kind of divvied up amongst the buyer and seller, but of late, the typical way we do these now is they're all on the seller side. And part of that is probably because it's hard for buyers and
To have
lenders to
any
predict
idea.
what they are.
Sure.
It's really not because they vary a great deal. And
Right. They could be minor or thousands of dollars.
Indeed, yes, they could be huge numbers, and if not anticipated properly, it could really hurt your ability to close on a loan.
Very, very much so.